Tell me a little bit about venture capitalists.
Have you ever seen the show Shark Tank? That's my job, except far less dramatic, far less televised. We're investing early in the hopes that it's going to become a very, very big enterprise. And so we live under this umbrella of the private market, purchasing ownership in a privately held company. There is going to be risk associated with this, but wow, what a ride. What's next? There's still this unsatisfied feeling of, I know that there's something more.
Why Pensacola? Why this area and not Austin or Atlanta or Jacksonville? Why Pensacola?
I think our founders deserve access to capital just as if they were in a bigger market.
Welcome everybody to Building Pensacola. I have with me today Kelly Reeser. Kelly, how you doing?
I'm doing great, Zach. Thanks so much for having me.
Kelly, I'm glad that you're here. Tell me a little bit about yourself and Gain Venture Capital.
Absolutely. So excited to be here with you. I am a Pensacola native and about 6 years ago started a firm called Gain Venture Capital. It's an early stage VC firm investing in technology startups. First fund that we built was $5.5 million vehicle to invest in companies across the Southeast U.S. And we are currently raising a second fund with similar ambitions of investing $25 million across early stage technology ventures, specifically with a hardware focus. And I think that there's some unique elements and unique timing in the world today that's going to make that make a lot of sense.
Tell me a little bit about venture capitalists. Like what is it? Like you hear it and you're like, oh man, they're venture capitalists. But it's like I was putting together these notes and I was like, what is a venture capitalist? I had to literally I was chat GPT-ing the crap out of this. And I was like, okay, I understand it more because you have bank loans, you have angel investors, and then you have VCs. And it's like, I think a lot of people get angel and VC kind of confused. But tell me a little bit about it.
There's a lot of, I want to say, it's an ever-evolving asset class. And so you are correct in that there are a lot of blurred lines, and we'll talk about that. But the way that I describe it, and the way I described it to my daughter's sixth grade class when I spoke to her class this past year, was I just basically asked, have you ever seen the show Shark Tank? And they're like, yeah, I love the show Shark Tank. And so I said, that's my job, except far less dramatic, far less televised. So we basically have, there are founders, people who are starting businesses, in our case specifically technology entrepreneurs, and they are looking for money to get that business started. And those founders oftentimes have a difficult time accessing more traditional resources, capital resources like bank loans. And so I guess this really does go into the story of how and why we started this firm. Was my partner and I, we were on the bookends basically of Northwest Florida. I'm in Pensacola. My partner's in Panama City. And we looked around and we said, there really is very little to no formal access to capital for early stage technology entrepreneurs. We said there are plenty of banks, but as we just mentioned, it is a difficult place for a traditional bank to lend, because oftentimes the startup, the entity itself, does not have historical financial performance. Oftentimes the companies are pre-revenue, and oftentimes they're even prototype, and so they have very little to lend on, and so they need a type of money that's willing to take that kind of risk for a commensurate amount of reward potential. So we're investing early. The ideal is that we're purchasing a portion of a small company in the hopes that it's going to become a very, very big enterprise, and that those shares or that ownership is going to be worth a whole lot more in the end. Where it lives on, and I feel like this has been an interesting way to think about it, is if you're looking at it from that's venture capital from the founder's side, from the startup, from the investment side. If you're looking at it from an investor's side and you're thinking, where do I, as a high net worth individual, where do I, as a person who's looking where to put my money, you look at it simply as there's public markets that everyone has access to. And then there's, and those are equity markets. You're buying shares in a company that is publicly traded. And then there's the private markets. And so we live under this umbrella of the private markets, specifically private equities, where you're purchasing shares of a privately held company. You're purchasing ownership in a privately held company that you typically would not otherwise have access to, because again, those founders hold all of those shares in the early days. So yeah, that's what venture capital is. It originates. You'll hear stories back all the way to the 1950s in Silicon Valley as the first investors were seeing the opportunity, willing to take the risk. And I think it actually started, and it's probably why I love it so much, is it actually started as like an adventure. So it's adventure capital. Let's just see where this is going to go. And obviously it became, tied with ventures, early stage ventures, not so much linking that to the adventure of it all. But it's that idea of like there is going to be risk associated with this, but wow, what a ride! And you have the potential for great rewards or great returns.
To go off the adventure part, like I grew up, with stories and all of that, Treasure Island, like any kind of story that's like you're going to somewhere. It's the journey, and you see all this character growth, and you putting it that way. Have you seen that within the people that you've invested in, their journey? Like, can you give me a little example of that?
Oh, absolutely. I'll have to think of a specific example that stands out, but I'll even say my own journey. I started my career in Pensacola working in economic development. Initially, that was housed under the Pensacola Chamber. We spun out, became our own organization called Florida West Economic Development Alliance. And Florida West hosted a program called CoLab, which is an incubator based in downtown Pensacola. And I was, throughout those 8 years that I managed that program, I was always entrepreneur adjacent. So I was watching these individuals that would come in and take up, residency in my incubator program. And so we would help them offset rent those first couple of years as they were getting started. We like to say that we couldn't actually put public dollars at risk in their ventures because of the risk associated with it, but we could help you contain cost in the early days so that they could put that capital, their own capital, back into their businesses. So for me, it was the journey of being entrepreneur adjacent, where people had identified usually this very niche problem that they were uniquely qualified to solve, and that they set their time, energy, effort, sweat equity, I guess, is what they were really putting in order to get that venture off the ground. Yeah. And so there's a couple of great stories where the company started out as College Frog. They basically started in the early, I would say, 2010s on the premise that college kids needed a platform to be able to find jobs. Again, if you can reverse back 15 years, and it's like, whoa, those things didn't exist. I mean, they wanted to be this recruiting platform and help connect college kids with jobs. And then they brought in a buddy of theirs who had been, a top sales guy at Monster.com, which again was, one of the earliest players in that space. And so they were growing this business. They were listening to their customers. They were trying to determine which problem is easiest to solve via, and really even as much automation as you can put in, because that's one of the hallmarks of a scalable business is how can you build in, I guess it's scalability. How can you build in some sort of automated element that makes the workflow happen much more simplified. And so then they found that they wanted to, they pivoted, to use the industry term, they pivoted into specifically, certain industry verticals. And so they pivoted initially into the accounting space, and they rebranded as, they were at College Frog, they pivoted to Accounting Fly, and then they really penetrated the accounting space. And they were connecting, recent college grads with accounting firms. And then as they continue to listen to their customers, they said it's not those entry-level hires that they're having trouble finding. It's those actually mid-level career professionals that they're having a hard time finding. Maybe they were with a big 4, big 5 firm and had, 4 years of experience and were ready to move to, a mid-market size firm. And so anyway, that to me was extremely enlightening, a lot of fun to watch, just to be on that journey adjacent to them as they were building their company. And I think for me, what was constantly going on in my mind, obviously I was learning vicariously through their experiences, and probably would hate to admit that I had my, kind of cozy paycheck that I was making, not taking the risk, but there was always, it just was stirring my appetite for what is that problem that I could solve? What is that problem that I could be uniquely qualified to build value in? And I think the other element, and I think this is always a part of a founder's journey as we talk, as I talk with and meet more founders every day, is there's that desire to sow value into something that you own, and that it may or may not work out, and you kind of like can stomach that risk, but you know that it is potential for life-changing value to your family, to yourself, that sort of element. And so as I was working with those founders through those years, I was always like, maybe there's an off-ramp here. Maybe I need to jump in and join this team, or maybe I need to start this really harebrained idea. And it just never felt right. I knew that it was never the right time or the right opportunity, until I'm going to fast forward, I guess, to maybe the 2018 timeframe, just knowing that I guess I'd been in the job almost 10 years, and I was like, what's next? I've enjoyed this, but there's still this like unsatisfied feeling of, I know that there's something more, some more value that I would like to create. And that's when my conversations with my partner had progressed to the next level of, is like constantly identifying the same problem and saying to each other, somebody really should do something about that. Steve, I wish somebody would do something about that. And then you just realize one day, you're like, it should be us. And so Steve and I started working together in 2019 to solve that fundamental problem of the lack of professionalized, formalized access to capital for early stage entrepreneurs.
That's awesome, because again, like, this area is known for like really great people. Like, we have a lot of people that come from here. Even, I'm pretty sure, y'all can check me on this, but Bezos came from Pensacola.
I feel like I heard Mayor Hayward at one point say that he spent 8th grade here or something like that. Like, there was some stint that Pensacola played into his success. Yes.
Ted Bundy was also here as well, but but a lot of times it's constant where people will get trained up, they'll get ready, and then they leave because the opportunities aren't here. And what you are doing with your firm and everything is awesome. But I have to ask, why Pensacola? Why this area and not Austin or Atlanta or Jacksonville? Why Pensacola?
Sure, absolutely. For one, it's home. My husband and I both grew up here, and we love the community. When we started, I think both of us through college and even graduate school were uncertain as to where we wanted to plant roots. And again, many a Pensacolian has the same story of, visions of someplace different, anywhere other than here. And then when push comes to shove, like, family's still here, and there's so much opportunity in Pensacola. I think for me, growing up on the north end of town, I'm a Tate High School graduate. Yeah. Oh, yeah. And then getting involved through the Chamber and Economic Development with really understanding the composition of the business community, like what really is in Pensacola. There are some very interesting and key differentiators. And again, speaking more broadly to the region, the presence of the military is huge. We've described it, or I've described it many times, where it's like our economy is just a solid third, a third, a third. So a third in military defense, government-related spending. A third of our economy is around tourism. And then there's this other meaningful third that needs to be grown and developed, and that we really can have a hand in creating opportunity. And then even within that third, my lane specifically with economic development became entrepreneurship and entrepreneurial development. So as we were identifying, assets and resources, there's amazing research happening at IHMC. There's, a growing emphasis in the last 10 years at the University of West Florida, migrating away from just being a teaching university to being more of a research institution. You've got, FSU, both in Tallahassee and the Panama City campus, and a lot of assets in between where there is some core fundamental primary research going on, which just really sets the stage for new potential, new commercialization opportunities of that technology. But then you leverage also that third of our economy that's built around the military, and you say, well, hey, there's opportunity here. Either, I think they described it as like either throwing technology over the fence, so commercializing research out of that originates within the walls or behind the walls of a military installation, or commercializing technology, or actually, I guess maybe
militarizing
or governmentizing, but like selling it to the military or selling into the government. And so there's a lot of that presence. And then the other question that we get, and you're asking, I heard it in your question as well, is again, nobody else is doing this in Pensacola or Northwest Florida. Like, why would it even make sense? And then the question becomes the answer, where no one else is doing this in Pensacola or Northwest Florida, so let's be the one. And my kids, one of their favorite movies growing up is the movie Ratatouille.
Oh, love Ratatouille. It's one of the best.
Once you know how to pronounce it, it's great. But I think the result or the end of that movie is, I think that not everyone can be a great chef, but a great chef can come from anywhere, right? It's a great quote, and you're just feeling inspired. But I would see that as the same opportunity that I felt like we are capitalizing on, literally, is that not everyone can be a great founder, but great founders can come from anywhere. And so I think for us, it's following along with that almost nationwide or just nationwide narrative that you don't have to be in Silicon Valley or New York City to build a great startup. And I think they, even the tier 2 markets that are in our region beyond those traditional hubs of, okay, well, if you're not in New York or Silicon Valley, you should be in Atlanta or Nashville or Austin. But there's just so much opportunity. Technology has enabled the ability for founders to build great things wherever they are. And so we have found some really unique deal flow access, which again, for any VC, they'll tell you that you're only as good as your access to deals, your ability to get into a good deal, because sure, we can bring in dollars from limited partners and we're sitting on this pool of resources called a fund. But if that fund isn't invested correctly or wisely or into founders that are going to do something great with those resources, then it's a moot point, right? So I think Steve and I, for sure, and the rest of our team, we fundamentally believe that a founder's success is our success. And so how can we fuel that? How can we come alongside them in their journey and really bring those resources to bear? So that's why we're here, because I think our founders, I think our founders deserve access to capital just as if they were in a bigger market. Yeah.
And the thing that, it's the noise to signal ratio. And I know that kind of goes into the rebrand that y'all are about to do and everything. But I was listening to Mr. Wonderful. He was on Diary of a CEO, and he was talking about the signal to noise ratio and everything. And in this area, there's not a lot of noise in the VC market. So it's like y'all are putting out the signal, and you are gathering people that the bank's not going to loan them money. And not everybody has an uncle that has throwaway money, And
it's always great Aunt Susie is always what I talk about. If you have a great Aunt Susie who's going to leave you that $1 million, then you're set. Or, it's if you don't have, a family member that plays golf at the country club, it's that kind of like, again, proverbial country club money where there's access to for certain individuals. And I think the goal across the industry, there's been a push to really democratize that access, where it's based on the merit of the idea and the team that you're able to assemble and your ability to execute on that idea.
I love that. I absolutely love that. One thing I do want to bring up is, I've talked to other people, we at HIP, the company that I work for, we deal with a lot of orthodontists and everything, and there are sometimes investors. And a lot of founders are afraid that investors, venture capitalists, whoever it may be, wants control. Like, how does that work with your firm?
Sure. So venture early stage VC is typically minority positions only, so we're not buying controlling stakes. There's it's a split bag because I, on one hand, have a fiduciary responsibility to the limited partners or the individuals who have given me money. And then I also have a heart for the founder who is building this company. And so we basically just are very clear up front with the legal documents that we sign. We very rarely deviate from what is kind of industry standard. So we are not looking for, and we don't take majority positions in a company. We do bake in information rights so that there's at least transparency and clarity, and really even more so, it's accountability for the founder. But I would even say a step beyond that, or a step before that, is that's part of our diligence process, is not just, is this founder going to, comply with the letter of the law? Will they, 15 days following the close of each quarter, provide us financial statements? It's more like, does this founder want the assistance that we're able to provide, that our team is able to provide? Do they shy away from accountability? If so, why? I mean, again, nobody wants to be controlled, especially if this is a project that it's a life work basically. But it also is the posture of the founder. If there's something where they're potentially hiding something and there's like a shady practice going on, so why don't you want that accountability? But again, the terms at the outset, we will always have information rights, which is, again, the close of each quarter, being able to have access to financial information. In cases where it makes sense, depending on the size of the check that we write, we would love to have a board seat or a board observer seat. So that would be a non-voting position, but you still have access to the information that's provided to the board. And so those are some of the ways where, and again, that is traditional venture capital. If you get into the majority stake where somebody's buying ownership, like 51% ownership in your company, your downstream, later stage private equity is where that comes with way more money. And then that comes with a completely different mindset, where oftentimes those private equity investors have in their minds and almost have a vision beyond just that individual company. There's maybe a set of companies that they're looking to put together, or there is some unique market expertise that they have where they're like, okay, we're going to take this shell that you've built. And a lot of times it comes with, like, people have called it hostile takeover, where it's like, we're going to come in and we're going to remove the executive team. We're going to replace it with our team. We're going to pump resources into it for 3 years, and then we're going to sell it again. That's a completely different model. And you don't typically refer to that as venture capital. That's later stage private equity. And that's not where we play. We're typically writing, in our first fund, we wrote anywhere from $100,000 to $500,000 checks. And we're getting anywhere from 1 to 6% ownership. So you can tell, like, we're in a completely different arena. And what we're betting on in that investment is 60% of our decision making comes with our confidence in the team, that they are able to take that company to the next level. So it may not be that this is the CEO that's going to take it to IPO or take it all the way to a public exit, but at least this CEO and this team is qualified to get to the next 1 or 2 rounds of financing. And so that said, I don't want to replace that CEO. I don't want to come in and control that person. I want that person to have the resources that they need to grow the business, and that I have, in essence, bought into the vision of that team for that company for this time. Does that make sense?
Yeah, it's more of a partnership.
Absolutely.
Than y'all are wanting to take the information and hold on to it. And, if you didn't trust the founder, you wouldn't ever put money into it.
Sure. I think for sure. Yeah. I mean, that's a bottom line is if there are red flags in that trust category, and it really becomes a lot more anecdotal at our stage of investing. You can, again, going later stage, you can look at, historical performance, and you're running, spreadsheets and models, and you're doing different calculations based on the performance of the company. And our calculus has a lot more to do with the vision, the market opportunity, the founding team, their ability to, again, get to market, or their ability to scale in that market, or their ability to find adjacent markets and monetize those. So it absolutely is, in some ways, very qualitative. And so we're putting together, and again, it's best practice in our space is to put together as much quantifiable information as you can about a very qualitative stage in a company's life cycle.
I feel like that would be kind of nerve-wracking. But it goes back to that adventure part of it. So I want you to bust one myth about VCs.
It's funny. I appreciate you kind of prepping me for this question because I would think that exactly the conversation we just had around hostile takeover and that mentality that all venture capital is not vulture capital. I think that's kind of the moniker, is that they've gotten the reputation of being almost vulturous, or we're going to come and just pick it apart. And I think that it doesn't have to be that. It doesn't have to be. I think you mentioned partnership. That's definitely what we feel like. We partner with our founders. But I feel like even more so is that our interests are aligned, is that sure, for X amount of dollars, I'm going to purchase X amount of ownership in your company. But what that means is if those dollars help you create $1 billion company, that you owning 90% of that company is going to be a way better outcome than you owning 100% of a company that never gets off the ground or never goes anywhere. And so our interests are aligned. Sure, you're going to pay me back a whole lot of money for my $100,000 or $500,000 investment, but that means that you've made significantly more. Does that make sense? Mm-hmm. And so I love the idea of our interests being aligned. But going back, I think you asked me a question that I never fully answered. Around, the type of company to take venture, or what do I tell people as we're talking about whether or not to take venture capital? I do tell people early and often that I am the most expensive capital you could take, and that if you don't have to take venture capital, or if it's not the course for what you're building, then it's not the right answer for you. If you're not interested in having a partner for the long run, if you're not interested in scaling for growth and selling your business within a 10-year time frame, I think that's the first question that a founder has to ask themselves is like, are you building a company that you would like to run for the rest of your life, and you're okay with it growing to big but not huge? Then probably VC is not because you are going to have someone who's saying, all right, I need you to continue on. I need you to continue to grow. And like I said, with the outcome that I would be the most expensive capital, because a bank loan, you can borrow $100,000 at, 8, 10, 12, 15%. You can take out a credit card. You can put, you can, even for crazy as those interest rates are, all of that is less expensive in the long run than giving away or selling 5% of your company or 10% of your company to an outside investor. But again, if that's the only capital that you have access to, and that's a trajectory that you're looking to build your business, then it's a great opportunity.
Yeah. And I think, when you get a loan from a bank or you get a credit card, that's it. Yeah. There's no partnership, there's no guidance. And I think a lot of times, creative people, regardless if it is, AI, whatever, it could be a creative like this as well, their tendency is not that great to be like good business people. Like that's not what they love, so having, and y'all aren't coming in to be their business advisors. Y'all are trying to help them, but having, another set of eyes helps a ton.
Absolutely. And some of that has resulted in a situation where it's like, hey, you need a co-founder. You are a brilliant developer. You even have the vision and you've identified the market need. You need somebody who can speak to people and sell this product or something, it, and it goes the other way where it's like, hey, I would buy whatever it is that you're selling, but you have no technical chops. Yeah. And so you need to put together a team and incentivize someone to be on board for the long haul. And, or again, that can look like a million different things based on the company's scenario. But yeah, we've definitely been able to be that external set of eyes on a company where it's just a different perspective.
Kind of said that VC is an adventure. I want to jump into some of your origins here. And, you've talked about your grandmother. I'm really close to my grandmother as well. Like when you were talking on Dave Gutman's podcast, like you were talking, I was like, yeah, that's kind of like my grandma. But your grandma like told stories to you about her in Buenos Aires and everything, and like really put this travel bug into you. Like, kind of give me like a 30,000-foot view. Like, how has that really taken you from being a child to where you are right now? Like, having her really stoke that into you.
And it's funny that you don't, of course, realize it's happening at the time, but you look back over the course of your life and realize, why did I do those things? Or and so I very much appreciate the question, and as grandparents tend to do. As they age, they tell the same stories over and over and over again. And so I can remember this handful of stories of my grandmother. She did. She grew up in South America. She grew up in Argentina, and then kind of the we call them the glory days of Buenos Aires, like the 1920s and 30s, and that's where she spent a lot of her teenage and early 20s years. And my grandfather was a international pilot back in the day, where he was from Tennessee, so from the U.S., but was flying the South America route. And just some fascinating stories of kind of the dancing in the big city, and so of course intriguing as a child. And then they lived for probably 10 years of their early married life in Lima, which is where my father was born. And she would always tell me, Kelly, you must travel to Machu Picchu. It is a wonder of the world. And she has a cute little British Argentine accent. And so, of course, that when you start doing projects in elementary school, I'm like, where do you want to? I just can remember being in, I had a school project assigned, and I had to pick a region of the world. And so I picked Peru, and I was going to do a project on Peru, and I had my dad cut up little wooden blocks, and we constructed Machu Picchu, and I wore like a poncho that my grandmother had given me from her travels. And I remember just dressing up kind of like an Incan Indian, and again, not thinking much about it at the time, but it was like that just was like that spark of curiosity for something beyond where you are in the world. And so I think that's probably the long-term impact that she had on me, was just, she had been those places. And so I could look up and I could see someone very close to me that had done that thing. And so when I, hit college, of course I wanted to study abroad. Of course I was going to write the research proposal to figure out how to fund my trip to South America. Like, of course I was going to do those things because Nana had done them, and why not? Why not me? And so I think there is a sense of maybe that sense of why not, coupled with just a little bit of a, I guess we call it wanderlust these days, where it's just desire to see more, see what's next.
It reminds me of, there was, for a very, very long span of time, it was like you couldn't run it was like a mile race, or I can't remember the exact amount of distance, but it's like you couldn't get it under 4 minutes or whatever. And one dude was like, I'm going to do it. He's like, I'm going to do this. And he trained. And then one day he's like, all right, I'm going to do this, and got like reporters or whatever, and then ran it. And people before that were like, this dude's crazy. No one's ever, like, this is never going to be broken. This record is never going to be held. He breaks the record. And then a week after that, another person breaks the record, another person. And like you saying, like, I had someone to look at and identify, they weren't just, a lot of people here think that they're trapped in Pensacola, but you were able to, like, my grandmother's been out and abroad, and like you are able to go do that and experience all those things. How has that helped shape your children?
Oh, well, I mean, I'm sure only hindsight will tell that, but my children, who are now 8, 10, and 12, are little adventurers. We love sitting around the breakfast table and talking about, where are we going to go next? What's the next adventure? And we had the opportunity about 2 years ago to start, again, it's partly their ages, but to start traveling a little bit more with them. So we were able to take a family trip to Costa Rica initially. Then we visited some friends last summer in the UK. And so I think it's just giving them those same, obviously different, but those same opportunities of just dreaming a little beyond where, the four corners of our home sit today. And I think I'll be very pleased, or I will not be disappointed at all if they grow up in the same house. I felt like that was a very stable environment for me growing up, was just the idea of home, deeply knowing and deeply understanding home, but that home was never a limiting factor. It was always a safe place. It was always a safe place to come back to. And so I think that it was, in many ways a launch pad, or springboard to whatever it was that I could dream up. And so now being able to do that together with my husband and our kids has just been fabulous. It's been a great adventure. And I do hope that they know no bounds as well. That's my desire for them.
That I love that. I absolutely love that, because so many kids today, like, there's so much in the world that is negative, but like having a place where they feel like they can try and take risk, but it is a safe place, and that they can really grow into their own is amazing.
Sure. And I honestly love, again, the way that my husband and I have crafted our home life intentionally, is that, of course, we love the dinner table. We love eating meals together. As many meals as possible, we're going to eat together. And then the conversation between that and even the car rider line. I think parents, those are two big opportunities: car rider line and dinner table, to really drill into some important subjects with your kids. And I think, in a way, I learned this from the founders, or again, those entrepreneurs that I worked alongside for all those years. Oftentimes, they were entrepreneurial because their parents were entrepreneurial, and they were like, it was just dinner table conversation around, filing taxes or starting a new business, or it was the idea of dinner table conversation and what that centers around in your home. So I think I'm extremely proud of the way that our children feel ownership in the company that we've started. That that every now and again, my middle son will say, "Mom, how's that guitar foot pedal company doing? How are they selling anything now?" And I'm like, "Yeah, buddy, they sure are." And so, or how's that medical device company? Are they, are they helping people with their spine? Just all these different things that I've told them as we're making investment decisions. I'm like, "Guys, let me tell you about this cool company," and then I move on. But then they circle back to it at the dinner table, and they're like, "Hey, Mom, how's that company doing?" Or how's Miss Caitlin and her Happily company doing? Like, how are those touch points and things that they remember? I am curious what, 20 years from now, what they will recall from dinner table conversation. And I think we've been pretty vulnerable around the risk that we've taken starting something new, leaving a job that's a steady paycheck to figure out if venture capital will work in Northwest Florida. And because of the nature of our business, we probably won't know for another 5 years whether or not it worked. And I think that there's a marker of success, the fact that we've built a fund and are, out raising a second fund. But really, people don't deem you a success until you have the exits, or till the companies sell and you're returning, 3 to 5 to 10 times their investors' capital. So we'll see.
We'll see. I love that, because your kids are seeing so much from y'all. And I remember growing up, my dad and my mom ran a business, so I think that might be why I love being an entrepreneur as well. It's like, oh yeah, like, they worked crazy long hours, especially my dad. Like, he ran a trucking company and everything. And it was just like seeing that and seeing like, oh, all of these parts have to move to make sure, oh, somebody didn't send their check. Oh, it's in the mail. I'm sure it is. My mom get on the phone like, hey, where's my money? It's all of those things, but it's like you really see, when your parents are vulnerable like that, you're not scaring the kids or anything, but being that vulnerable, it's like, hey, adults don't have it all together,
Sure.
you know?
Absolutely. But it's also the flip side of the things that energize you. Like my youngest son a couple of days ago, it's summertime, and he said, he was like, "Mom, do you have to go to work?" And I was like, "Buddy, I do, but I get to go to work. Like I've got some meetings today that are going to be really cool and going to be really exciting." And so I think that there's that shift as well, because it's easy to just maybe separate the two, where it's like, oh, work is the thing that mommy has to do. It takes, it takes her away from me. She doesn't even like doing it, so why does she do it? Versus like shifting the narrative to say like, no, this is something that, that energizes us, and we're building this for our family. They feel along for the journey. And so then it's almost like you don't, I don't know, it doesn't conflict as much when it comes right down to it, because this is something that they understand why I'm doing this and what I'm doing, and it doesn't feel quite so disjointed, I guess, from the rest of our lives.
Take me to Madrid.
No, dear. So Madrid, I did undergrad in Dallas, and part of the scholarship that I attended, SMU on, allowed for a semester, a year abroad. And so, of course, beginning of my freshman year, I knew that, and I was like, all right, let me start mapping this out. What's, which is the right semester? What am I going to study? Where can I go to really maximize the time? And they didn't have anything in South America, which I was kind of sad about at the time. But I was studying Spanish, and they had a program in Madrid. So the fall of my junior year was really my first, I would say, prolonged stint outside of the U.S. And so just, again, a semester, pretty easy as an adult to say like, oh, it's just 3 months. At the time, it was an eternity.
That's a long time for, a young adult.
It felt like it at the time. And there were times in the moment where it felt very long. What am I doing away from home? Is this what I thought I wanted to do? But I will say it probably was the most impactful education experience of my life, because it was so completely immersive. So I was learning, everything that I was learning was in context of Spanish history. So it was Spanish art at the Prado Museum, which was fascinating. I don't want to say zero, but very little appreciation for fine arts ahead of that class. But getting to spend every Friday of class, walking by an El Greco and just these amazing portraits. And so that was amazing. And then, political science was in context of, of the Spanish government structure. And then history was, again, I could name all the monarchs from, the origins of the Spanish country. So it was just this time where everything fed into the other. And I would say I probably felt smarter than I ever have, because I was like, I can recall Spanish monarchs back to the origins of the, the nation, and all the way through current political systems. And I was like, I never felt like my education was ever that cohesive or kind of all in one and inclusive. So again, combined with the intensity of being with a cohort-based class, and you would do travel around the country. It was an amazing experience, and again, just really fulfilling as far as getting to experience life, getting to experience new places. And I think Barcelona was my favorite. Probably still to this day is pretty close to my favorite city, just because of what a dreamy time in life it was when I got to go, and all the unique elements that we learned about the architecture and Gaudi art influence on the architecture, on the sidewalks, every element of Barcelona life. Anyway, so yeah, that's part of that semester abroad that was just extremely impactful.
How did seeing all of these different elements, the art, the political systems, all of these things working in tandem, because in the US, we're taught US history. We get very little world history, and it might be a semester in college. But how did seeing that, how has that helped you with your venture capitalists?
Sure. So I think it's all about perspective. I mean, it's the willingness to look at, a culture, look at a system beyond the one that you know innately because of how you were raised. So I think that there are many studies. And again, I feel like if you begin any sentence with "there's a Harvard study on," everything that you say after that is qualified, right? Yep. But again, I know that there are studies around just even corporations with diversity at the table in their boardroom. They have higher profit margins or higher profits, and I think in leadership teams as well, it's just diversity of opinion, diversity of experience leads to a better decision or to a better outcome, and maybe not a faster one, maybe not a smoother one, but I think in the end, researchers have been able to quantify it's a better one, right? So I would say all of those experiences have played into being able to bring just a difference of perspective into my decision making, and I think that I have similarly been able to construct a team where we have enough difference in perspective that we're able to make good decisions, good investment decisions. So I've mentioned my partner, Steve. He and I started the firm together, and we get along so very well. We have made decisions together extremely well over the course of the last, 6 years of working together. But I don't know that we could be more different. That he is an engineer. He's extremely analytical. He's going to crunch the numbers, and he's going to dot the I's, and he's going to cross the T's. And I'm like, give me the feel. What are we going for? What's the culture of the company? So we just look at things very differently. I value what he brings to the table. He values what I bring to the table. And so I think it's a good working relationship. We added a third team member probably about 2 years in. And he's more on the accounting side. And so he brings that unique perspective of all the financial statements that he's looked at over the course of the last 50 years of his career, as well as kind of that intuitive people sense. And then we're bringing in some manufacturing expertise. So there's some domain expertise, but also selling into military clients. And so, that bolsters the decisions that we'll be able to make in that sector. And then we brought in-house our legal counsel, a woman named Tiffany, who is deep experience from the startup side. So negotiating contracts on behalf of startups over the course of the last 10 years of her career. And so we've steadily been, flipping her over to the VC side of the house, but it's great to have her as a partner in the mix as well. And so, anyway, just bringing together unique perspectives so that we can make as informed a decision as possible in every decision that we make.
So limiting blind spots. That's what I really got from that, is because a lot of times you want people that resemble you, that have your same views and all of that, and it's comfortable. Mm-hmm. It's real comfortable.
And we have a lot of fun because we all get along and think the same way.
But there's blind spots. Like Nick and I, we're similar in a lot of ways, but Nick doesn't like the black-eyed peas. I like the black-eyed peas.
We will determine who's right.
Yeah, exactly. But I love that, because so many people get stuck in, well, you think like me, so I don't have to fight you, whatever it is. And when you're in any kind of business relationship, it's better to be challenged by your partners than someone that you're trying to do business with, because you can have the answers. You can have, before you ever open the doors, you can already have answers and fixes for those things.
And a lot of that, ultimately, it is a mitigating factor to the risk of a very risky space that we're in. And so if we can talk about and think about and again, triangulate on the right answer as much as possible. Like you said, ahead of conversations with either a founder or whatever the decision is, it's definitely better for sure.
So we're going to talk some VC 101, because like I said at the beginning of this, I didn't really know a lot. So founders, they hear that they need to earn 3 times as much from a customer over what they spend on the relationship of the customer.
So you're talking about lifetime value of a customer versus customer acquisition cost.
Yes. Can you explain that with a lemonade stand?
With a lemonade stand, absolutely. Oh man, oh, what a great question. So yes, I guess if you've and I do love this because my kids have been a part of some kids business fairs, and so bringing all of that, they've literally done a lemonade stand in the front yard, and so we live in a neighborhood, so it's relatively high trafficked, and so we don't have to advertise or do spend a whole lot on marketing because we do have a lot of just organic traffic coming through the neighborhood. But we talk about cost of goods sold is like you have to factor in obviously your materials.
Inside the deal room, when you're on a video call, you might be in person or whatever. What are 3 signals that tell you that you need to do a deeper dive on that person?
Left eye twitching, I guess. The on the person as far as like, oh, that's a red flag, you're kind of shady.
Yeah, it could be both. It could be
No, it is a great question because every conversation is so unique. Every deal is unique. I will say one of the red flags that we do look for in especially when it comes to analyzing the team and the founder is salary. That's a very difficult. It's a difficult position for us to be in if the founder's salary comprises 50% of the round. Wow. You're raising $500,000 and you're going to pay yourself $250,000. You're like, no, I'm sorry. You're making yourself a job and you're going to walk. Like, we're investing in this company. You are key to this company, absolutely. But the challenge is we want those resources to go into building the company, and it's a red flag if there's something in your personal life that necessitates that level of salary at a pre-revenue venture, right? So, again, every deal is different. There's, consideration given for, okay, you live in Boston or you live in Dothan. Like, those are two different markets. You're at, $5 million in revenue or you're pre-revenue. Like, those, you're paying yourself differently according to those segments. But why do you need our money if you're capable of pulling that kind of money out of the company already? And I think that is probably the biggest red flag that we have encountered that goes very quickly into the non-starter category, or it's like if there's something, very rarely is it shady, but it's maybe something unreasonable in our opinion that we're like, well, sorry, this isn't for us. So that's definitely one.
So tell me about like some team dynamics. What would be a green flag that you see like the team and the founder interacting? What would be like, oh, I feel really good about this?
Well, initially in that same vein, a very good indicator is if there's skin in the game on behalf of the founding team. So in the same lane that, if you're taking a huge salary, the other is if you've put personal money into the deal. And that depends on the person, obviously, right? So if you're capable of you had a successful exit, you sold your company for $20 million and you only put, $10,000 in, there'd be a question there. But then also it's, but hey, our interests are aligned. We've put in $1 million as a founding team and we're building this company. We just need, additional capital to grow the company. As far as culture and understanding of the team, I do appreciate a founder who has an eye to culture. It's not impossible to build early on, but a lot of times things are going at such a pace that a founder has a hard time slowing down long enough to put in place the systems and the processes that typically equate to repeatable culture, right? In a very just traditional sense. And so if you know that founder has a vision for the type of firm that he or she wants to build, that's a green flag for us. Is like, we know that you want, because as we know, the culture is crucial to not only hiring but retaining top talent. And again, in the early stages, especially of a technology company, like what is a company but the talent that they're able to bring in the house. And so I think for us, they need to have an eye to culture. but there also has to be an extremely clear focus on go-to-market. Like they know how they are going to get that product to their customers, and there's going to be a full court press, I guess, on achieving that goal.
And I think one thing to balance, any good leader is being able to talk with your team and everything, but not be a pushover, a people pleaser, and then not be a jerk. Like that is like I've seen, usually like people on this scale, like you're dealing with technology, they're usually very smart and they're competency driven. And I've seen people where they're just tyrants to the people that are working with them. And when you're in a startup position, it's really hard to replace somebody that's working there like way past what they're getting paid.
Sure, absolutely. So it's interesting. I want to step back and not take too much deviation, but a lot of times in the VC world, there's the concept of pattern recognition. And so you look at what has made a successful company or what has made a successful founder in the past, and then let's look for more like that, right? So there's this pattern recognition of whatever metric that you care about. And this is where I feel like I choose to be a little contrarian because, again, someone like a Steve Jobs, like all of those things you just said, right? And or so they say. I've obviously never was inside the walls at Apple, but there's a certain level of dysfunction that does go into the pattern of great founders. And so I'm like, do we need to prioritize dysfunction? Like, should that be what we're actually looking for in people? Because typically I'm looking for well-adjusted humans and people that are healthy and well and focus on their own mental health as well as the balance in the life of their team. And so it is a little bit of that choice where there are instances where megalomaniacs, is that too strong of a word? But where that type of personality type does just the sheer inevitability of the success of the venture is what brings people along for the ride. But we have not encountered founders like that we have chosen to back.
That you chosen to back. Research shows that roughly 2/3 of venture-backed companies never return capital. What failure pattern appears again and again in the deals that you've passed on?
Again, we could talk about portfolio theory or all the ways that we stomach that failure rate with the prospect of and the statistical probability of those winners. That's very much the area that we focus on is, okay, as long as we've got 3 or 4 clear front runners that look like they are going to be able to return the fund, then it's okay, right, by our fund metrics that those other ventures fail. But patterns, you asked pattern recognition and the ones that we've passed on. So it's interesting. I think even being 6 years in, we're kind of a little too early to note the ones we passed on and how that equates to failure, because it's just typically it's a little bit longer of a cycle, and we've probably not done as good a job of touching base with the ones that we passed on. But I will say that the ones that we are closer to that are experiencing less than ideal growth, I would say that the pattern that we have seen, and I think the learning for moving forward is that there was not a clear go-to-market strategy. There was an assumption or a hypothesis made around who was going to buy what they were building, and that didn't pan out. And so again, that definitely happens. You think that you're going to create this thing, launch it into the market. And so I think that there will be much more rigor on our side around how well does the founder understand the go-to-market strategy, and that go-to-market strategy has been as tested as possible pre-launch, right? Or if we're looking at the phase in the company where they're, hey, we've got these early adopters, but how are we going to cross the chasm and go to mass market scale, that they have a very informed understanding of how that customer adoption is going to proceed and scale. So I think that element of that would probably be the thread that I would pull there. That it's the not thoroughly understanding, and research isn't the right word, because again, there's all the best numbers on paper, but something in the behavior of the customers didn't translate from the research. So
You can have the best idea, but if you never get it out the doors,
right,
it doesn't matter.
right. And so I think it's the Steve Blank wisdom of, get out of the building as early and as often as possible when you're building a startup, and talk to your customers. Don't be so married to your product. Don't be so married to the technology or the thing that you're creating that there is not an understanding of who cares.
Mm-hmm.
And that's kind of a hard thing to tell a founder, is like, oh, wow, that's amazing. Look at your patent portfolio. Who cares? Yeah. And I don't mean that as in like, I'm not blowing you off. I'm saying, no, actually, who cares enough to pay for this thing that you have made? And so who is it that really cares about that?
There's a term in the editing world, video editing, in that you have to murder your darlings. Where you
see spaces, you have to tell a founder that his baby is ugly.
Yeah, it's about the same thing. It's where you've got this timeline and you're married to it, and it's all of this, and then it's like, well, does this actually serve the purpose of what I want it to do? And then you just have to start going in and chopping it up and murder your darlings. So I know, like in Pensacola, like we've got the Blue Angels, and like they're amazing. They're very daring. What would you say that needs to happen in the next 5 years in Pensacola to dare people to stay and build world-class businesses here?
Yeah. Great question. I absolutely love that. I think that there is no finer demonstration of precision human machine interactions than the Blue Angels. I mean, it's obviously it's amazing, and it has been for years and continuing to improve, which is what's
amazing.
Right. So I do think that the piece of the puzzle that we are working on solving right now, we're putting together, is the access to capital piece. And I think it's a big piece, because even though traditional funding sources in the traditional hub sense, like people who are funding businesses in the Valley or in New York City or Austin or Boston, they say that they're funding outside of those walls, but the reality is it's geography and proximity do matter still. And so I would say that our firm headquartering capital in Northwest Florida is a big piece of the puzzle and a step in the right direction of allowing founders to build here in this region. And I am proud to say that of our first portfolio, out of the 20 companies that we invested in, 8 of those have ties to Northwest Florida. And so it's a pretty solid percentage when you think that we were looking. It was primarily Southeast U.S. focused, but we were looking in much bigger markets. Like these were, there were Miami deals that we saw. There were, deals out of Atlanta, out of Nashville, and some of those we did choose to invest in. And but the founders that we met, knew, understood, had known for years, those when stacking up their opportunities against those from bigger markets, we were able to make those decisions to invest in them. And so we're proud of that. We're excited about that, and excited about what that means as we are returning capital, not only via those founders, but returning capital to our LPs. We have, in our first fund, we had 82 investors from across Northwest Florida. So my vision, and this is, again, still getting around to answering your question. So my vision that we'll look back 10 years from now, we'll look back and see how our funds have activated the capital base. So not only were those LPs who participated in Fund 1 a part of the activation or the stirring of that capital activity, but as we're returning money to them, they're saying, oh, I'm more willing to put money in the next deal that comes my way. I'll caveat by saying there were so many conversations that I had where someone said, oh, well, I've invested in technology, but I lost my shirt in the .com bubble. Like when, and I'm like, okay, that was 25 years ago, right? Where it's true, but technology is in a completely different place. It's not going away like so many of those companies did in that kind of pre.com bubble burst. And they had not taken a risk with technology ventures ever since, right? Yeah. So they just basically stepped away from that asset class. And in the meantime, Apple became what it's become. NVIDIA became what it's become. Google, Amazon, all of the tech giants became what they are now. And again, for fear from a previous experience, those LPs, those investors maybe sat on the sideline in a way that they didn't before. So what the goal is let's reengage that capital base. Let's reengage those dollars. Let's put that money to work. And will that continue to grow Northwest Florida economically? Absolutely. I believe that that it's just shifting the appetite. That if maybe it's FOMO, your buddy made some money in this deal. Not only was it cool that they got to invest in the next drone thing coming out of Northwest Florida, but they were also able to make quite a bit of money in the process. So that's the goal, is that kind of conversation is permeating the region so that when a founder wants to take a risk, that those pieces are in place. I don't know, I can visualize the Blue Angels now as we're putting those pieces in place where there is a mechanism by which they can get that venture off the ground.
Let's jump into our rapid fire questions. Would you rather have a grilled cheese sandwich or a taco made exactly the way you want? And how would you have it made?
Taco, for sure. Street taco size flour tortilla. Bronzed mahi-mahi. Pineapple mango salsa. Light cabbage. And a touch of some type of chipotle sour cream.
Wow. You know exactly what you want.
I was seeing it as we were discussing. Yes.
If your life had a reoccurring movie quote as the tagline, what would it be?
I absolutely love this question. It's wonderful. I'm not sure if you got it from one of your previous guests or if this is one of your favorite questions to ask, but there were so many. I do love movies. Yeah. I absolutely love. So part of me went Gladiator. Like, what you do in life echoes in eternity.
It's a good one.
It's a good one. But then also, it's where the Ratatouille comment came in, where, the idea that in the movie that a great chef, not everyone can be a great chef, but a great chef can come from anywhere. I do believe that in context of our space, that not everyone can be a great founder, but a great founder can come from anywhere. And Forrest Gump said it best when he said that life is like a box of chocolates. You never know what you're going to get. And so part of the joy is not exactly knowing, but finding that next treat. So any of those, I don't know.
What is a favorite book of yours that everyone should read? So this could be founders, this could be entrepreneurs. What is a favorite book that you think you need to read this?
I've got three again.
Okay.
I've got three. There's a recent read for me, and in part my personality. So I do love personality profiles. It's taken over the corporate zeitgeist. I don't know, corporate culture in the last 20 years is understanding how you tick so that you can understand how you can work well with other people. One of my favorites is it's an Enneagram book called The Road Back to You. And I just love the storytelling and the way that the guy lays out the different personality types. Honestly, it's been transformational in my marriage. My husband and I have really enjoyed reading that together, and it's given us a lot of common language. And so with that, part of this is I'm a 7 on the Enneagram, which is a very like external personality type. Like I am very much in tune with the people around me, and honestly, very, very much about anticipating the next big thing. So I make a lot of sense now in venture. Like given that personality type, there's always another deal to be made. There's always another opportunity for that founder. Maybe it's that next relationship that's going to be the key to the success or whatnot. So I'm a very external. My personality is very external, and so kind of. I've struggled with slowing down and taking time both for myself and for oftentimes even relationships. And so that my next book would be, this was again many years ago that I read it for the first time, but it's called 3 Cups of Tea. Are you familiar with that one? No. So Greg Mortensen, I believe that's his. So Mortensen, I know is his last name, but he was, I think, backpacking or hiking through Pakistan and came across, basically he began this humanitarian effort to establish schools in Pakistan. But before you can do anything in that culture, he said that you have to have at least 3 cups of tea with someone before they'll do business. You can't speak of business until 3 cups of tea in. And that's 3 separate occasions is how he lays it out in the book. And for me, that was extremely impactful around slow down, take time, see people, and as exciting and as fast-paced as life can be, the real value and the true value is in just building a relationship, and that's often built 1 cup of tea at a time. And then probably the last, if we were to go classics, I am a Sherlock Holmes fan, like inside and out. I absolutely love anything deductive reasoning, and I think that has to do with just what we've talked about previously is looking at problems from different angles and being able to see things that maybe not everyone else sees. But again, that often requires like slowing down, but combining your own paradigm, your own experience into that decision-making process. Those are my 3. All right, what's next?
Favorite Pensacola restaurant, and what do you order?
As a family, we are big Flounders fans, so we love the outdoor playground, and we are going to order a gigantic platter of seafood nachos. So Flounders seafood nachos, that's our go-to.
You get a free billboard on I-110 for 1 week. What's the single sentence that you put on the billboard?
Chris Reeser, I love you, exclamation point. Anyway, that's what I would say to my husband. If it were to be Pensacola specific, I am an encourager by nature, so I would honestly have to just say you are loved, period. That's what I would say.
What is next for your journey, your VC entrepreneurial journey?
Thought you'd never ask. I knew early in this venture that I wanted to build a firm, not a fund. Venture capital is organized around funds, and funds have a very definite 10-year life cycle. But I wanted to build something even bigger than just a single fund. I wanted to build a firm. And so for me, that looks like what started out as just a couple of people. Me and my partner built it to 4 team members in the early days. We've now expanded that to 7 partners, and we're raising a $25 million vehicle to invest across early stage technology ventures. So raising that fund, deploying and allocating those dollars into the best deals possible, and then Fund 3, and then partnerships and relationships with, with research institutions where we're providing value for commercialization efforts. All of that is in in the works, in the sights. And then even long-term vision, I would love to, and I think that the need in the marketplace regionally is for some sort of even earlier stage capital. Maybe it's an angel network. Maybe it's kind of a unique to our region crowdsourcing platform, but some way that a founder can have that first $25,000 or $50,000 investment to test the idea. And that's not something that our firm can really take that risk on. So long term, it's a firm that would encompass everything from very first angel check all the way through. With Fund 2, we're looking to write $1 million checks into early stage technology companies, but it's multiple vehicles that provide formal professionalized access to capital for early stage technology founders in Northwest Florida and beyond.
And beyond. Kelly, thank you so much for coming on to Building Pensacola.
Thank you for having me, Zach. Appreciate it.
As we wrap this up, let everybody know where they can find you and how, if, we've got someone that is wanting to, maybe get on route on Fund 2, how do they go about that?
So we have just rebranded, literally launched in the last 2 weeks, the new brand. The firm previously was called Tech Farms Capital, but we are rebranding to gaincapital.vc is our website. So Gain Venture Capital is the name of the firm. I am Kelly at gaincapital.vc, and would be happy to entertain conversations with both interested parties and prospective founders.
Awesome. Well, there you go, everybody. That is this episode of Building Pensacola. Make sure to like and subscribe, and make sure to leave a 5-star review. Nothing less than that, because Mama said, if you don't have anything nice to say, don't say anything at all.